The auctioneer's voice carried across the gravel lot, like a warning bell every farmer in Nobles County could hear. March wind cut through the crowd gathered at Dale Hoffman's place, but nobody moved to get out of it. They stood there, watching lot after lot go under the hammer. When the John Deere 4440 rolled up, 4 years old, barely 3,000 hours on it, the silence felt heavier than the iron itself. Gary Bergstrom stood at the back with his hands deep in his Carhartt pockets, watching a tractor worth $35,000 3 years ago sell for $14,000 to a dealer from Sioux Falls. Dale wasn't there. Some men can't watch their lives get auctioned off piece by piece. His wife stood near the machine shed with her sister, not crying, not talking, just standing there like she was waiting for it all to be over. Gary had known Dale since they were kids in the Worthington school system. They'd both inherited their Fathers farms within 2 years of each other. They'd both started with around 320 acres and dreams of building something that would last. But somewhere in the late 70s, their paths diverged in ways that seemed small at the time and catastrophic now. What I'm about to tell you is based on documented events that happened across the upper Midwest between 1979 and 1985. While I've drawn details from multiple real cases and added narrative elements to tell a complete story, every economic trend, every piece of equipment mentioned, every price collapse you'll hear about is pulled from Federal Reserve agriculture reports, USDA farm census data, and interviews with farmers who lived through what came to be called the worst economic disaster to hit rural America since the Dust Bowl. The numbers are real. The equipment specifications are accurate. And if you lost your farm during this time or watched it happen to neighbors, I want you to know I've tried to tell this story with the gravity it deserves. Gary and Dale had both been at the Farmers State Bank meeting in late 1978 when a loan officer, a young guy fresh out of AG Business School at Minnesota State, had drawn charts on a whiteboard showing farmland appreciation rates. Nobles County land that had sold for $800 an acre in 1970 was bringing $1,800 in 1978. The projections showed $2,500 by 1982. The fundamentals are solid, the banker had said. World population growth, developing nations industrializing, American agriculture feeding the planet. This is your window to expand. Dale had believed him. Gary had wanted to. The difference came down to one piece of machinery and the debt it represented. In the spring of 1979, Dale Hoffman had walked into Benson Implement in Worthington and signed papers on a brand new John Deere 4440. That tractor represented everything the decade promised. 115 horsepower, power shift transmission, sound guard cab with air conditioning and an AM/FM radio. It was the kind of machine that said you were serious, you were modern, you were ready for the future of agriculture. The price tag was $38,500. Dale put $8,000 down and financed the rest at 9.5% through the dealer with a Production Credit Association guarantee. Gary had gone with him to look at it. He'd sat in that cab, felt the tight hydraulics, smelled the new paint and fresh rubber. For about 15 minutes, he'd wanted it so badly his chest hurt. He was still running his father's old Farmall, a 1952 tractor with no cab, no power steering, and a personality that required you to know its quirks like you knew your own wife's moods. Starting it on cold mornings was an art form. The steering wheel fought you on every turn. It leaked oil from places Gary couldn't quite locate, but it was paid for. It had been paid for since 1957. You should get one, Dale had said as they walked out of the dealership. We could probably work out a deal if we both bought. Maybe get them down to $36,000 each. Gary had looked back at the gleaming green machine sitting on the showroom floor. Maybe next year, he'd said. Let me see how things go. He'd driven home in his '74 Ford pickup and spent that evening in the shop, changing the oil on the Farmall. The tractor was older than he was. It had been old when his father died and left him the farm in 1976. But it ran, it pulled, it did the work. By 1980, the world Dale and the banker had bet on started coming apart. The Soviet grain embargo, Jimmy Carter's response to Afghanistan, cut demand just as American farmers had planned for record production. The Federal Reserve, fighting inflation that hit 13%, started raising interest rates in ways nobody had seen since the Depression. The prime rate, the the baseline for all agricultural lending, climbed from 11% in 1979 to 15% by early 1980. By December 1980, it hit 21.5%, the highest in American history. Dale's equipment loan, tied to the prime rate, adjusted. His 9.5% financing jumped to 14% by his second anniversary payment. The $30,000 he still owed suddenly cost him $4,200 a year in interest alone. That was before he paid down any principal. Gary, driving that paid for Farmall M, watched fuel prices climb and fertilizer costs spike, and knew his margins were getting crushed. But he didn't have debt service. Every dollar corn he sold might have bought less than it did the year before, but it was his dollar, not the bank's. If you're wondering what happens when interest rates double while commodity prices fall, let me give you the numbers from the Federal Reserve Bank of Chicago's Agricultural Lending Survey from 1981. The average Midwest farm family saw their debt service costs increase 68%, while corn prices dropped from $3.11 per bushel in January 1980 to $2.41 by December 1981. Soybeans went from $7.57 to $5.89 in the same period. You didn't need an AG economics degree to do that math. You were paying more to banks while selling crops for less to elevators. Dale started working longer hours, trying to farm his way out of trouble. He rented another quarter section from a widow in Adrian, figuring more acres would spread his fixed costs. That meant more seed, more fertilizer, more diesel. The John Deere 4440 ran dawn to midnight during planting and harvest. It was a beautiful machine, and it was eating him alive. Gary farmed his 320 acres the way his father had, the way his grandfather had. Conventional tillage, crop rotation that actually meant something: corn, soybeans, oats. Hey, back to corn. He didn't chase yield records. He didn't rent ground. When parts broke on the Farmall M, he fixed them himself or found them at Pearson's salvage yard out past Reading. He spent evenings at the kitchen table with his wife Linda, looking at numbers, figuring out where they could cut. They stopped eating out. They stopped taking the truck to Sioux Falls for anything that could wait. Linda started sewing patches on work clothes that would have been trash on most farms. It felt like poverty. It felt like failure. It felt like they were getting smaller while everyone else was getting bigger. But in the winter of 1982, when Dale got the letter from Production Credit Association, Gary understood what his choices had actually meant. The PCA letter was polite. It acknowledged that Dale had never missed a payment, that he'd been a valued customer since 1979, that they appreciated his business. Then it got to the point. Due to deteriorating conditions in the agricultural sector and the need to strengthen the institution's portfolio, they were exercising their right to call his operating note. Full payment of $63,712 was due within 90 days. Dale brought the letter over to Gary's place on a Tuesday evening in February. The wives were in the kitchen. The men sat in the living room with the television on, but neither of them watching it. Dale's hands shook as he held the paper. "I don't have $63,000, Dale said. "Nobody has $63,000. "What about the land?" Gary asked. "It's worth half what I paid for it. I'm underwater by maybe $80,000. If I sell everything, I still owe them." The John Deere 4440 sitting in Dale's machine shed had a loan balance of $24,000. Its auction value, in the spring of 1982, was maybe $15,000 if Dale got lucky. That $9,000 gap represented dreams, projections, expert advice, and the simple human desire to be part of something rising instead of something standing still. According to lending records from the Federal Reserve's 9th District, which covers Minnesota and the Dakotas, loan delinquency rates for production agriculture hit 18% by the end of 1982. That meant nearly 1 in 5 farmers wasn't making payments. The Farm Credit System, the government-sponsored network that included production credit associations, was bleeding. They'd made loans based on land values that had collapsed by 30 to 60% depending on the county. Their portfolios were full of underwater assets, and their solution was to call loans and force liquidations before things got worse. They weren't evil men at the PCA office in Worthington. Gary knew some of them from church. but they had regulators breathing down their necks and balance sheets that looked like crime scenes. Farmers who couldn't pay were liabilities that needed to be resolved. Dale tried to negotiate. He brought 3 years of crop records showing he was a good farmer. He brought a business plan showing how he could make it work if they just restructured a loan, lower the rate, extend the term. The PCA officer listened and said his hands were tied. The decision had been made at the district level. Liquidate or pay in full. In late April of 1982, the bank seized the John Deere 4440. They sent a truck and a deputy sheriff to make it legal. Dale stood in his driveway and watched them load it. His oldest boy, 16 years old, had tears running down his face. His wife didn't come out of the house. The auction was set for June. Dale would steal the difference after it sold. The PCA was also moving to foreclose on his land. He had until September to come up with enough money to pay off his entire position, or the farm was gone. Gary went to that auction in March, the one I started this story with, because Dale had asked him to, not to buy anything, just to be there, because having someone who understood what this meant standing in that crowd felt like it mattered. The John Deere 4440 sold for $14,200. Dale still owed the bank $9,800 on a tractor that no longer existed. Now let me tell you what was happening on Gary Bergstrom's place while Dale's world collapsed. Gary was farming 320 acres with an unpaid for 1952 Farmall M and a debt-to-equity ratio of 0. That didn't mean he was prospering. Corn prices in 1982 averaged $2.68 per bushel, barely above the cost of production when you factored in everything honestly. His yields were good, 114 bushels per acre on the corn ground, which was respectable for Nobles County. But good yields at bad prices still left you scrambling. The difference was that every penny Gary made belonged to him. He wasn't paying $9,000 a year in debt service. He wasn't watching interest compound faster than his crops could grow. When corn brought $2.68, that price hurt, but it didn't break him. The Farmall M, that old tractor Dale used to joke about, became something else entirely in 1982. It became the difference between survival and extinction. Gary spent more time maintaining it than he would have spent on a newer machine. The Magneto needed rebuilding in March. The clutch started slipping in July, and he spent 2 weekends in the shop replacing it with parts from a salvage M that Pearsons had bought from an estate sale in Fulda. The hydraulics leaked. The seat was held together with duct tape. Starting it required a specific sequence of throttle adjustment and choke position that Gary could do in his sleep, but looked like mechanical mysticism to anyone else. But it kept running. And every time Gary drove it past Dale's place and saw the empty space where the John Deere used to sit, he understood exactly what that old tractor represented. It wasn't ambition. It wasn't progress. It wasn't the future of agriculture. It was the ability to farm on his own terms in a world that was trying to drown farmers in debt. Let me give you some context about what Gary was driving and why it mattered. The Farmall M was produced by International Harvester between 1939 and 1952. Total production was well over 250,000 units. It was rated at just under 40 horsepower at the drawbar, running a 4-cylinder gasoline engine that displaced 248 cubic inches. It had a 4-speed transmission, no power steering, no cab, no modern conveniences of any kind. These tractors sold new for right around $2,000 in the late 1940s. By 1982, a good used Farmall M in working condition could be bought at auction for maybe $1,200 to $1,500. You could fix almost anything on them with basic tools and patience. Parts were everywhere because there were so many of them still in service. They were simple enough that a farmer with mechanical aptitude could rebuild the entire engine in his own shop. The John Deere 4440, by comparison, was a technological leap into modern agriculture. Electronic controls, complex hydraulics, emission systems, proprietary parts that required dealer service. When something broke on a 4440, you didn't fix it yourself unless you had diagnostic equipment and specialized training. You called the dealer. You paid the service rate. You waited for parts. In normal times, that trade-off made sense. The 4440 was faster, more powerful, more comfortable, more productive. In crisis times, the trade-off became a trap. Gary could keep the Farmall running with a socket set, a parts catalog, and time. Dale couldn't keep farming without the John Deere, and once the bank took it, he couldn't afford to replace it. Through the summer of 1982, Gary watched his neighbor try to figure out what came next. Dale borrowed an old Oliver 70 from his wife's uncle and tried to keep farming, but his heart wasn't in it. The PCA had him on a payment schedule that required selling everything he produced before he touched a dime. He was farming for bank, and everybody knew it. In September, Dale made his decision. He called the PCA office and told them he was done. They could have the land, the buildings, the machinery that was left. He'd find another way to make a living. He wasn't going to spend the rest of his life working for free, while the bank collected everything he produced. The PCA officer tried to tell him about farm mediation programs, about appeals, about restructuring options that were coming in the 1985 Farm Bill. Dale said he was tired of maybes and programs and promises. He signed the papers that terminated his operation, and by October, he was working at the Green Giant plant in Montgomery, running a processing line for $7 an hour. His wife got a job at the nursing home in Worthington. They moved into a rental house in town. The farm that Dale's grandfather had homesteaded in 1903 went back to the bank, was sold at auction, and was bought by a doctor from Sioux Falls who wanted crop ground as a tax shelter. Dale Hoffman was 36 years old. He'd been farming for 8 years. He'd made one decision: to buy a new tractor at the top of the market with borrowed money, and that decision cost him everything. But let me be clear about something, because this matters. Dale wasn't stupid. He wasn't reckless. He wasn't gambling. He was doing exactly what the agricultural establishment, the banks, the implement dealers, the university extension agents, the Federal Agriculture Department told him to do: expand, modernize, increase productivity, capture economies of scale, buy equipment that would let you farm more acres more efficiently. The system told him to go into debt. The system told him land values would keep rising. The system told him that American agriculture was positioned for a decade of unprecedented growth. And then the system changed its mind, raised interest rates, cut export markets, and let him drown. Gary Bergstrom never said a word of criticism about Dale's choices. Not once. Because Gary understood that the difference between them wasn't wisdom. It was luck and timing, and maybe a deep conservatism born from watching his own father struggle through the 1950s, when grain prices were terrible and every year felt like survival. But Gary paid a price too, a price that didn't show up in bank statements. Through 1983, 1984, and into 1985, Gary kept farming his 320 acres with that Farmall M. He survived. But survival isn't prosperity. His kids wore hand-me-down clothes. They didn't go on vacations. His daughter wanted to go to college, and he had to tell her they couldn't afford it. She could go to the community college in Worthington and live at home, but the state university was out of reach. His wife, Linda, took a job at the elementary school, working lunch service for minimum wage, because they needed the health insurance. The farm income wasn't enough to pay for individual coverage. They stopped going to church socials because there was always food to bring or a donation expected, and they couldn't spare it. They stopped seeing friends because everyone was either struggling like them or had lost their farms and moved away, and the conversations were too painful either way. Gary's back started giving out in 1984 from years of bouncing on that Farmall seat without suspension, from manually wrestling a steering wheel without power assist, from loading grain trucks by hand because he couldn't afford an auger. He was 41 years old, and his body felt 60. The tractor that saved his farm was slowly destroying his body. In the spring of 1985, the clutch went out again. Gary spent a weekend rebuilding it and realized he was working with the same parts he'd installed 3 years earlier. The pressure plate was wearing out faster than it should. The whole system was tired. He priced a rebuilt transmission from a dealer, $600. He could maybe afford it, but it would take everything they'd saved over the winter. Linda needed dental work that insurance wouldn't cover. Their younger son needed glasses. Gary decided to baby the clutch, to work around it, to make it last one more season. That's what survival looked like in 1985 on a paid-for farm. Choosing between fixing the tractor and fixing your wife's teeth. Knowing you'd won by not losing, but feeling like losing anyway. Now, before I go further, I want to give you some broader context, because these individual stories were playing out across the entire Midwest. According to the USDA Census of Agriculture, there were approximately 2.44 million farms in America in 1978. By 1987, that number had dropped to 2.09 million. Over 300,000 farms disappeared in less than a decade. In states like Iowa, Minnesota, and Wisconsin, the numbers were even more stark. Farmland values in the Corn Belt dropped an average of 60% between 1981 and 1986. Farmers who had borrowed against land worth $2,000 an acre found themselves underwater when that same land sold for $800 an acre. The Farm Credit System, the network of federally sponsored agricultural lenders that included production credit associations like the one that foreclosed on Dale, nearly collapsed. Between 1984 and 1987, the system wrote off over $4 billion in bad loans. Rural banks failed at rates not seen since the Depression. In 1985 alone, 69 agricultural banks failed. Small towns lost their implement dealers, their feed stores, their main street businesses. The ripple effects of farm foreclosures hollowed out entire communities. This wasn't just an agricultural crisis. It was a social catastrophe that broke families, ended marriages, and contributed to a documented mental health crisis in rural America. The University of Minnesota Extension Service documented a 400% increase in calls to farm crisis hotlines between 1982 and 1985. Rural suicide rates spiked. Farm stress support groups formed in nearly every county. Churches and community organizations scrambled to provide emergency assistance. The human toll of these years can't be measured in foreclosure statistics alone. Gary and Dale's story played out in thousands of variations across the Midwest. Some farmers held on. Some didn't. Some found ways to restructure debt. Some didn't have that option. Some marriages survived. Some didn't. Some children stayed in agriculture. Most left. What made Gary's situation different wasn't virtue. It was that old Farmall M and the lack of debt it represented. By 1986, things began to stabilize. Not recover, stabilize. Interest rates started coming down. Commodity prices found a bottom and started a slow, painful climb. The 1985 Farm Bill created some restructuring mechanisms, though they came too late for families like Dale's. Land values stopped falling and began what would be a very gradual recovery through the late 80s. Gary was still farming in 1986, still running that Farmall M, still paying the price in his back and his wife's tired face, and his kids understanding that they were different from the families who had money. In the summer of 1987, 5 years after Dale lost his farm, Gary finally had a decision to make. The Farmall M was dying, not dramatically, not in a way that stopped him from working, but the engine was burning oil, the transmission was grinding, the rear axle had developed a bearing noise that sounded like warning. He could rebuild everything, but at a certain point you're just postponing the inevitable. He went to an auction in Jackson County and looked at used tractors. There was a John Deere 4240, a step down from the 4440 that Dale had lost, but still a modern machine with 6,800 hours on it. The bidding started at $9,000. Gary watched it sell for $12,500 to a farmer from Fairmont. He went home and spent the evening in the shop, draining the oil from the Farmall M and looking at the metal flakes that settled in the drain pan. The engine was wearing out from the inside. Linda came out to the shop around 9 o'clock. "How bad is it?" she asked. "It's 35 years old," Gary said. "It doesn't owe us anything. Can you fix it?" "I can keep fixing it," Gary said, "but I don't know for how long." She sat on the workbench, her legs dangling, watching him work. "Dale called today," she said. Gary looked up. He hadn't talked to Dale in over a year. The friendship had survived Dale's foreclosure, but it had gotten complicated. Hard to know what to say to a man who lost what you kept. "He's doing okay," Linda continued. "He's a shift supervisor at the plant now. They bought a house in Worthington." Small place, but it's theirs. That's good, Gary said. He said to tell you he's glad you made it. Gary nodded, not trusting his voice. He also said, Linda paused. He said he thinks about that John Deere sometimes. About how much he wanted it. About how sure he was that it was a right move. Gary set down his wrench and looked at his wife. What else did he say? He said he doesn't blame the tractor. He blames the system that made him think the only way to be a real farmer was to go into debt for machines he couldn't afford. Through the open shop door, they could see the Farmall M sitting in the yard, silhouetted against the evening light. It looked like what was a relic, a survivor, a piece of machinery that had outlasted its era through sheer stubborn functionality. I used to be embarrassed by that tractor, Gary said. When Dale got the 4440, I felt like I was falling behind, like I was a farmer who couldn't afford to keep up. And now, Linda asked, now I'm just grateful it keeps running. Gary did rebuild the engine in the winter of 1987 to 88, not because he wanted to, because he had to. Because even with things stabilizing, even with prices slowly recovering, even with the immediate crisis passing, he still couldn't afford to replace the Farmall M with anything modern. He bought a rebuilt engine block from a machinery salvage outfit in Iowa. He spent 2 months in the shop that winter, working evenings and weekends, learning things about engine timing and valve tolerance that his father had never taught him. His son helped sometimes, learning alongside him, both of them figuring out a machine that was built before either of them was born. When he finally got it running in March of 1988, it didn't sound new, but it sounded healthy, strong, like it had another few years in it. Gary farmed with that rebuilt Farmall M until 1991. 9 years after his neighbor lost everything, Gary was still using the same tractor that had saved him. In 1991, with commodity prices genuinely recovering and some actual money in the bank for the first time in a decade, Gary bought a used John Deere 4430. It was 10 years old, had 8,000 hours on it, and cost him $18,000. He paid cash. He brought it home on a trailer, and his kids came out to look at it, excited because it had a cab and air conditioning and a radio that actually worked. Gary drove it twice before he understood that something felt wrong. The problem wasn't the tractor. The problem was that after 9 years of fighting to survive with machinery that was barely adequate, with no debt and no margin for error, with every decision measured against the risk of losing everything like Dale had, after all that, success fell hollow. He'd made it. He'd kept the farm. He'd survived the worst agricultural crisis since the Depression. But he'd spent a decade getting slowly ground down, and the weight of that didn't lift just because he could finally afford a newer tractor. Linda found him in the shop one evening that summer, sitting on the old Farmall M even though it didn't run anymore. He'd parked it behind the shed, couldn't bring himself to sell it for scrap. You thinking about Dale? She asked. Yeah, Gary admitted, and about what it cost to not be Dale. We made it through, Linda said. Did we? Gary asked. I mean, we kept the farm. That's true, but look at what we gave up. The kids didn't get the childhood they should have had. You worked yourself to exhaustion. My back shot. We lost friends. We lost our place in the community because we couldn't afford to participate in anything. We survived, but I'm not sure we won. Linda was quiet for a long moment. Then she said something Gary never forgot. The system wanted both of you, she said. Dale, because he believed the promises and went into debt. You because you believed you could outlast it and paid with everything else. Different traps, same game. We survived, but maybe that's all we were ever going to do. These same financial principles apply today when farmers face decisions about whether to buy new equipment or maintain old machinery, whether to expand operations with borrowed money or stay small and debt-free. Agricultural lending has changed since the 80s. Loan-to-value ratios are more conservative. Banks are more cautious. Restructuring mechanisms exist that didn't in 1982. But the fundamental tension remains. The pressure to expand and modernize versus the safety of conservative growth and minimal debt. The lessons from Gary and Dale's story are taught in farm management courses now, not because either man made a clearly right or wrong choice, but because their experiences show what happens when individual farmers bet on macroeconomic conditions they can't control. Dale made a rational decision based on expert advice and reasonable projections. Gary made a conservative decision based on risk aversion and family history. In a different timeline, with different Federal Reserve policy, Dale's farm would have thrived and Gary's would have stagnated. The tragedy wasn't that one man made a good choice and another made a bad one. The tragedy was that the system created conditions where farmers had to make all-or-nothing bets on interest rate movements and export markets and land value trends that were ultimately decided in Washington and Wall Street, far from the fields of Nobles County. I tell this story not because Gary was smarter than Dale. I tell it because an old Farmall M tractor, paid for, outdated, barely adequate, became the difference between keeping a farm and losing it during the worst agricultural crisis in 50 years. Not because it was better, because it was paid for. And I tell it because every time we reduce the farm crisis to statistics and policy analysis, we lose sight of what it actually meant on the ground. 2 neighbors, 2 families, 2 different choices. One kept farming but paid with his health and his family's quality of life. One lost everything but found his way to a different life that didn't involve watching the bank take everything you'd built. If you lived through this era, I want to hear from you. What were the choices really like? What did it cost to survive? What did it cost to lose? The comment section is open, and I read every single one. This history matters because the forces that created the crisis never went away. They're still active, still pressuring farmers to expand, to modernize, to go into debt. And the next generation of farmers needs to understand what happened when an entire system betrayed the people it was supposed to support. If this story meant something to you, if it touched history you lived or history you need to understand, subscribe. Share this with someone who needs to hear it. And remember that behind every foreclosure notice, every auction, every farm that went under, there were human beings trying to make choices with incomplete information in a system that was rigged against them from the start. Gary Bergstrom still farms at land in Nobles County. He's 74 years old. His son farms with him now. They run modern equipment, manage the operation carefully, carry some debt, but nothing like what Dale faced in 1982. Gary keeps the old Farmall M in a shed. It doesn't run. He's never tried to restore it, but he won't get rid of it. When I asked him why, he said something I think about often. That tractor's the reason I'm still here. I can't look at it without remembering what it cost to keep it running and what it cost to keep farming. Both prices were higher than they should have been, but I paid them, and I'm still here. That's what survival looked like in 1982. An old tractor, paid for, barely adequate, slowly breaking down. And a farmer willing to pay every price except the one the bank demanded. If that meant something to you, you know what to do.